Hi, I'm Rob Van Raphorst. Welcome to MBA Now. This week we're joined by Mike Fratantoni, MBA's chief economist, for an update on the recent Federal Reserve meeting and the overall housing market. Mike, thanks for being here.
Thanks, Rob. Good to be here.
So Mike, the Federal Reserve Board of Governors recently met. What were the key takeaways from that meeting?
So Rob, at their July meeting, they really gave a clear signal that starting this fall, probably announced at their September meeting, beginning in October, they're going to begin to shrink their balance sheet. So the Federal Reserve's balance sheet increased from about $900 billion pre-crisis to $4.5 trillion today. They're the largest single investor in mortgage-backed securities in the world. And with this change that's going to commence this fall, they're going to begin backing away from those investments, letting them roll off. It's a big change in the direction of policy. It suggests that the Fed is confident about the state of the economy, particularly the strong job market. A little bit of concern about the lack of wage growth and lack of inflation we've seen to date, but I think they're ready to move ahead and begin to shrink that balance sheet. They also indicated that given the strength of the job market, they are likely to raise rates one more time, we think in December of this year. So upward pressure on rates really across the board.
So what does this mean for interest rates?
They're going to raise short-term rates one more time, so our short-term rates are going to increase. Long-term rates, so many factors influencing that. What's going on around the world, strength of the economy. We think longer-term mortgage rates are going to increase from about 4.2, where they've been the last couple of weeks, to 4.5 by the end of the year. So a modest increase, but upward pressure, at least partly due to the Fed's actions.
What other key indicators should our members be on the lookout for in regards to the overall health of the housing market?
Well, home sales have looked really quite strong lately. New home sales up almost 10% on a year-over-year basis. Existing home sales up to about 5.5 million. We think those will continue to increase over the next couple of years until we get to a steady state around 6 million per year. Really constrained at this point by the lack of inventory on the market, less than 4 months of supply in most markets around the country. And with that, we are seeing rapid growth in home prices. So FHFA announced that over the last year, home prices up almost 7%. Really very strong growth. We think that's supported by this lack of inventory.
Great. I mean, this is all really great information, and please come back and talk to us more about the state of the housing market as things progress.
Thanks, Rob.
Be sure to follow us on Twitter at MBA Mortgage and like Mortgage Bankers Association on Facebook and Instagram.